Top USA stock movers: N-VIDIA, Amazon, Apple, and Wall Street. Reaction to Powell's comments. Friday, Aug.23 24 stocks rose and bond yields dropped after Jerome Powell's comments reinforced expectations that the Federal Reserve will cut rates in September while leaving the door open for further reductions. Among stock movers Friday, large-cap tech stocks were mixed. AI investor darling N-VIDIA was up more than 3%, while Apple, Amazon, and Alphabet also gained. Microsoft and Meta platforms were slightly lower. The iShares Semiconductor Index was up 2% after falling more than 3% the previous session. Gold futures were up about 1%, around $2,550, not far from record highs hit earlier in the week. Bitcoin jumped above $63,000, trading at its highest level in 3 weeks. The time has come for policy to adjust, Powell told economists gathered in Jackson Hole. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. His Jackson Hole speech also highlighted other important points. For example, Powell acknowledged recent progress on inflation and noted that the economy is growing at a solid pace, which offers reassurance following recent concerns about growth. However, it was Powell's focus on the cooling labor market that drew significant attention. This was interpreted as a sign that the Fed would take action to avoid a severe slowdown. Powell has signaled the start of the cutting cycle, said Seema Shah at Principal Asset Management. Neil Dutta at Renaissance Macro Research pointed out the absence of the word gradual in Powell's speech, suggesting that the Fed is not ruling out larger moves as policy evolves. The strike price on the Powell put is rising, Dutta added. Treasuries rose across the U.S. curve, with the 2-year yield falling below 4%, and the dollar weakened against its major peers. Swap traders maintained their forecasts for about 98 basis points of rate cuts through the end of 2024, and the odds for a quarter-point cut in September remained steady. Krishna Guha at Evercore noted that while Powell did not specify the size of cuts, the pace implies the possibility of more significant moves if needed. Given the Fed's commitment to supporting the labor market while addressing inflation, we interpret Powell as open to 50 basis point cuts if the data suggests this is necessary to address deteriorating employment risks, he said. However, Zaccarelli cautioned against overreacting. It's crucial to balance investment strategies. Don't plan for an imminent recession or become complacent just because the Fed is expected to lower interest rates soon, he advised. Market participations have raised their expectations for the Federal Reserve to aggressively cut interest rates after Fed Chair Jerome Powell's eagerly awaited speech at the Jackson Hole Economic Policy Symposium on Friday. At around noon ET, traders were pricing in about a 35% chance the Fed will cut its benchmark interest rate by half a percentage point to a range of 4.75%–5.00% at the September 18 Policy Committee meeting, according to the CME Group's Fed Watch tool, which forecasts interest rate movements based on Fed funds futures trading data. That's up from the 24% likelihood priced in on Thursday. Traders were also pricing in a 76% chance the Fed will trim a full percentage point from the Fed funds rate, which is at a 23-year high, by the end of 2024. That compares with the 64% likelihood that was being priced in yesterday. Jerome Powell's speech was packed with dovish signals, making a strong case for adjusting policy. This should provide a supportive tailwind for the market through the end of the year, reducing the likelihood of revisiting this month's lows, said David Russell, global head of market strategy at TradeStation. Powell's speech highlighted the fading of inflation, shifting the Fed's focus to its other mandate, maximum employment. Rate cuts are almost certainly on the horizon, beginning next month, though the pace and extent of these cuts remain uncertain, said Ted Rossman at Bankrate. The recent economic slowdown doesn't indicate a recession but rather a typical correction. September, being historically volatile, may bring increased market fluctuations. For those who missed buying opportunities in early August, Consider adding positions on dips," said Glenn Smith at GDS Wealth Management. Macro market movers. S&P 500 rose 0.7% as of 1:21 p.m. New York time. Nasdaq 100 rose 0.6%. Dow Jones Industrial Average rose 0.7%. MSCI World Index rose 0.9%. Currencies. Bloomberg Dollar Spot Index fell 0.9%. Euro rose 0.7% to $1.1188. British Pound rose 0.8% to $1.3201. Japanese Yen rose 1.1% to 144.75 per dollar. Cryptocurrencies. Bitcoin rose 2% to $61,870.93. Ether rose 2.4% to $2,687.84. Bonds. The yield on 10-year treasuries declined 3 basis points to 3.82%. Germany's 10-year yield declined 2 basis points to 2.22%. Britain's 10-year yield declined 5 basis points to 3.91%. Commodities. West Texas Intermediate crude rose 2.7% to $74.95 a barrel. Spot gold rose 1.1% to $2,511.34 an ounce. Do you have any profit today? Let me know what you think in the comments below. Thanks for watching. Good luck and good profit, by Edward Cash Trader.